Hey everybody, what's going on? It is James here with Crypto Common Sense, aka 3 Peaks Trading, and I wanted to sit down today and do a video showing you why the math is in your favor and showing you how absurd it is that anybody loses money trading. We've all heard these statistics that float around the internet talking about, 90 and 95% of people fail at day trading, and most people lose money when they try to trade, and all these sorts of things. And the cold hard fact is this. If you're trading a system, for example, where you're risking $1 in order to make $1, that's called a one-to-one reward to risk system, right? It's symmetric risk. With no edge whatsoever, you essentially have a roughly coin flip chance of being right or wrong. So you just flipping a coin. Excluding execution costs like slippage and fees, which are very minimal with equities, but more so with crypto, you should essentially, over the course of, say, 1,000 trades, be roughly break even if you're trading a one-to-one system. And we can actually run some code to see this. So if I go into this little bit of code and I say my win rate is 50% and say that I won $1 when right and lose $1 when I'm wrong, and then I run this code, it'll tell me that my mean final R after 1,000 trades is minus 0.11. So basically break even. So I want you to stop and think about that for a second, because what that means is in order to lose money trading, at least a significant amount of money, you have to be worse than a coin flip. Now think about that for a second. You don't have to just climb the mountain from the very base of the mountain in trading. You're not starting at the bottom. You're actually starting halfway up the mountain already, because you have a random chance of roughly 50-50 of being right with a one-to-one system. And I would even argue that in some cases, that may even skew in your favor just by simply trading with the trend. There's probably a slightly higher chance the trend will continue than it will reverse. And so if you're trading a one-to-one system with the trend, theoretically speaking, you should already have a positive edge in the market. And let me show you why that's really important. Let's say that we change this win rate to 51%. Just 1 extra percent, because maybe we're trading with trend only. Let's run the simulation again. Now we can see that the mean final R is roughly 4, and so is the median final R. We can also see that the probability that the account is greater than the return is greater than 0 after 1,000 trades is about a 58% probability. So basically, if you're just a little bit better than a coin flip, you're profitable. A lot of people don't understand that. Some people do. But now I'm going to take this a step further. Let's say that you're trading a system that is consistently losing 60% of trades. Let's say you're trading one-to-one, for example, and you're losing 60% of the time. Here's what your results would look like. And I'm going somewhere with this, so stay with me. So obviously, if you're losing 60% of the time after 1,000 trades, you'd actually be down about 40 R. So 1,000 or 100. I may have this set on 100. Sorry, 200 trades. This is running 200 trade scenarios. So after 200 trades, you'd be down about 40 R. That's obviously terrible. But think about this. If you're consistently losing one-to-one trades 60% of the time, the only modification you would have to make to have a positive edge is to reverse the direction. If you're losing 60% at one-to-one and you suddenly started taking the opposite direction, it means you would be winning 60% of trades. So here's the crazy thing, guys. If you're trading one-to-one, no matter if you're winning consistently or losing consistently, you have already found an edge. Let me repeat that. Whether you're winning consistently or losing consistently, you have already found an edge. Because if you're winning consistently, obviously you have an edge. But if you're losing one-to-one consistently, you have an edge. It's just inverted, which means you just flip the direction and now you have a positive edge. The key to all of this, of course, is to make sure that the trades you're taking are rinse and repeat setups. What I mean by that is they're not just random guessing, in which case it would be hard to just simply change direction. That they're actually based on setups or specific structure that is going to repeat itself, so that you know, for example, hey, when I take this exact setup, I lose 60% of the time. So when I see this exact setup, I'll flip the other direction in the future. That's all there is to this. It's actually really, really simple to become a very successful trader. The math is already on your side. The only reason people lose money trading really is because they let their emotions dictate their decisions instead of logic. If you follow the logic and you stick to the math will help get you there. So I'll wrap the video up there. Please remember that I am just some guy sitting in a spare bedroom, and nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Please stop now to give the video a thumbs up. Please subscribe to the channel, and please leave me a comment letting me know what you think.